You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That theme music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Quite a few programs for you guys to check out on the old network, including many great archived episodes of this fine program, Volatility Views. Where can you find all that goodness? Well, of course, the easiest place, the mothership, the flagship, theoptionsinsider.com. While you're there, check out some unusual activity, some breaking news from the options market, of course, some education, some analysis, hot options reports, all that fun stuff you've come to know and love from us over the past nearly decade now over there on the website. And when you're ready to mainline the audio, go for it. You can always find it, of course, iTunes, TuneIn, Stitcher, all those good places, including via the app stores. So if you're not rocking our app yet, go for it. It's a great way to get all of our content, including all of our deep back catalog, which can be hard to find. I know iTunes will limit how many they display, and other places will as well. So if you want to get it all, you want to go back and check out this episode from a few years ago, this interview we had with this CEO of this trading firm or brokerage firm or exchange or whatever it may be, trading firm, etc., well, then the app's probably the easiest way to get all of that stuff. And, of course, while you're in the app, you can always find how to hit us up. We love to hear from you guys, including some epic questions. We'll see how many we can get to today. But first, let me welcome on my cohorts. A little bit of a rotating panel this week as everyone's scattered hither and yon today on the old program. But never fear, we've still assembled quite the cast of characters for you. Starting off with the man beaming in all the way in from the great duchy, nay, Principality of Maine. You know him, you love him, as the Rock Lobster, doing yeoman's work on the network this week. OB again, and now VolViews, so his voice is going to be done by the end of the day. He is the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program, and welcome back to VolViews, sir. It's been a while.
It has been a while. Usually Mark monopolizes this Friday slot, but I took it from him. I wrestled from him as he is on a top secret mission today.
He has been clinging to the VolViews seat for grim death, except yesterday when he tried to get in our chat room for Option Block and we banned him. So that was a highlight of the week, definitely.
And he was not happy. He's like, I can't believe you booted me. He was very, very upset about that.
That's what he get for pulling a full Sebastian in the chat room. We can't have that while we're doing the show. It's madness.
Totally booted.
All right. And speaking of booted, we should have booted him, but we didn't. He had a last-minute change of plans, had to hop on a flight. So Mr. Corner Office can't join us today, but we got a very able stand-in, fill-in. He's been on the show before. It's been a few months, though. He is Mr. Bill Luby, the major domo over there at All Things VIX and More. So if you've always said to yourself, I like VIX, but I wish it just had a little bit more. Well, he's the guy to talk to. Bill, welcome back to the Volatility Views program. And what's been cooking in the land of all things VIX and mooring since the last time we spoke?
Glad to be here. Lots of stuff going on. I have not been as active on the blog as usual, but I continue to write for publications like Barron's. I've been on the seminar circuit and have been managing some volatility strategies at Luby Asset Management. So my public profile is still there, just may have morphed a little bit into something else.
Well, you're the good guy to have on, because I always say that to myself. I'm like, I wish VIX had just a little more. So you're the perfect guy to have on the show today. All right, with the team assembled, we're going to dive right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is, of course, a portion of the program where we break down the week that was and indeed still is over here on the old Volatility Views program on the Options Insider Radio Network. By the way, I always forget to mention at the top of the show, hopefully you can join us every Friday, noon Central, 1 p.m. Eastern, streaming live as we are wont to do via Mixlr, Mixlr. So if you want to talk all things VIX with us, send us some crazy fun questions or just insult Andrew. We welcome all those things over there in the mix. Just be careful. Too much insulting, you'll get the ban hammer just like Sebastian did yesterday, which, again, highlight of the week for everyone involved. All right, and again, we are streaming this live right around noon Central here on Friday, October 28th. Hard to believe, October already almost in the record books. Crazy how fast this year is rolling. And as we're rolling along, speaking of rolling along, the market's rolling along pretty nicely as well today. Earnings season resounding, I guess I say a bit of a resounding mess so far. Some names knocking out of the park, some names a little bit less so. Averaging out to a bit of a shrug for the most part. Again, we still have a lot more names to go. But the market kind of liking what it's seeing, moving ever so slightly to the upside, up about a little less than half a percentage point as we're talking right now, but about 7.5 handles or so out there in the S&P. The Dow up a similar percent, and the Nasdaq, tech-heavy Nasdaq, actually taking a bit of a day off today, pretty much unched on the day. And all this upside, and indeed the impending weekend, meaning VIX Cash taking a little bit of an exhale after getting a little bit of a lift earlier in the week. They're hovering right around 1466 right now. A lift that I wasn't a huge fan of because I was of course fading out about a little less than a handle lower than where we are now. We were all fading it pretty aggressively last week. Mr. Greasy Meatball perhaps most aggressively. So maybe over the course of the show, we shall see if it's happened before where it's drifted away and drifted close to my name. Let's see. We got about an hour or so. We'll see if the VIX can drift my way and make me the winner yet again and prolong my streak here in the crystal ball. But before we do that, Bill, you're our guest co-host for today, so I will give you pride of place. It's been an interesting, if relatively light volume week out there talking all things VIX. It's been kind of an interesting environment, of course. We are in the kind of final run-up to the election here, so there's been a lot of debate about what impact the election would have on the volatility, what election have had historically on volatility. So there's been a lot of debate there. We see how Trump seeming like he was getting closer a little bit, and the VIX kind of ticking up as a result. Then all the audio tapes and everything else kind of came out, and the debates, and it seemed like, I wouldn't say put the nail in Trump's coffin, but definitely maybe put him behind a run or two in the old race. So things are perhaps settling off a little bit as a result. That said, what's been catching your eye this week from a volatility perspective?
Well, I was about to say nothing, but since the time that you started talking about 10 minutes ago, the VIX has spiked about 8%, and it looks like the the FBI has reopened the case of Hillary's email. So
there you go. See,
what had been a really quiet week has suddenly gotten crazy as soon as this show has opened.
They like that. They know our show is live now, and so they want to give us something to talk about. So that was very charitable of the FBI. I'll make sure to send them a Christmas card this year.
But no, other than that, it's been very quiet. I did notice a lot of vol selling, and I thought it was interesting. Thanks to the SIBO, who has, I believe, SPX options expiring at 5 minutes every day now. But you can look at the Monday, Wednesday, Friday expiration and notice that after the election, the implied vol jumps from about 10.5 to about 14.5, and that was before this news started breaking, so that might have changed as well. But so that huge differential in a post-election IV, but really it hasn't been showing up in many other places that I've been watching, at least in any sort of magnitude, of course, until the last 10 minutes or so.
And refresh our listeners maybe who are not familiar with what your asset management side over there, kind of what strategy are you up to over there behind the scenes? Are you straightly VIX strict VIX options, VIX futures term structure? What is it that is that you're trading out there from a vol perspective for a lot of our listeners?
Three things I focus on. One is the term structure. That includes the options, futures, exchange traded products, the ETPs, in a way to capture the arbitrage, the roll yield time decay, that sort of thing. Also, more broadly on volatility risk premium across all asset classes, geographies, sectors, and then do some other work with the various ETPs and volatility compounding. So it's at least a three-headed monster, but the constants in there are the entire VIX product space and options across a broad category of products.
I like it. Maybe you change the name to Hydra Asset Management, three-headed Hydra. I like it.
I thought of that. Either that or Cerberus.
Oh, there you go.
I guess that's taken.
That is kind of taken. You're right, but yeah, you can probably find some ways around it. Maybe not taken in the asset management realm, so maybe you can work around. Maybe certainly not in the volatility space. So that could be your argument to the trademark and copyright lawyer. All right, and Mr. This is usually where I toss to the greasy meatball, but he is off having greasy meatball subs somewhere. So Mr. Rock Lobster has been an interesting week so far this week, if somewhat a light week. So what has been catching your eye from a volatility perspective, sir?
Well, we talked about it on the show yesterday. I think the VIX is kind of going under a little earnings play effect to the extent that, I mean, Hillary was a lock. I guess if the FBI starts talking to her again, maybe we're running out of time for it to matter for the election. But again, I thought back month volatility, or let's just call it, because the vol was staying so high right around the election, the Nov 9/11 cycle, that would be the fact that they kind of hold the straddle at around 2%, which is about trading around $46. The vol's been up all week, but the straddle's about the same price. That's similar to an earnings effect that spills down the term structure to basically, all the vol per term until you kind of hit where the VIX starts to calculate. And so the vol being up in the front has kind of a spillover effect to the VIX 30 days ahead, because VIX is not looking at anything expiring on the 9th anymore, or on November 9th. So, and it turns out that actually, and I guess you get the little surprise from Hillary right now, and it looks like the market, now it's going back and forth, but what I thought was that would still be a gentle driver of vol, not enough to make it really spike hard unless there's a huge landslide surprise, but it would keep VIX bid. So we were looking at plays in there. I was trying to buy some cheapy VIX call spreads today. Didn't quite get there. I'm still looking at a fly if I can find something cheap enough for settlement next week. But and it turns out how that's kind of a touchy. Anyway, I think the vol's just a little touchy there. I don't think it's going to be below. I don't see how it's really below 14 before the election, given sort of what's happening with volatility in the near term. So, earnings have been, in general, good. And VIX has done nothing but gone up for the last week. So, albeit from a sub 13, I touched sub 13 a little bit. So, that's kind of how I see all that. I don't think we're going to have a lot happening again for next week. So I think the vol there is kind of dead. But again, you can always have a surprise announcement. So, which looks like it's happening. So I don't think the stocks can quite figure out what's going on with whatever the FBI is doing. But I think that's how I see VIX. I thought we'd trade 16, and we darn well near did today. So it's not going to surprise me to see it crawl up, probably somewhere close to that level at least by the time the election goes. Even though for whatever the polls say, it's kind of a lock. But like we saw with the Brexit, things can change.
Things can indeed change. And speaking of changing, the term structure has been interesting to watch out there. We've been talking a lot on the show of late out there in the VIX futures, just how steep that front month future and the second month future have been to the cash. That seems to have been flattening out relatively right now. It's about 80 cents from the cash to that front month future, and about a point 0.40 or so to the DEES future out there. So much flatter than it has been of late. Before we get into the VIX options activity, which admittedly there wasn't a ton this week, we'll kick that off in a minute. But first, as you mentioned earlier, it is kind of earnings season. So we would be remiss if we didn't do a little bit of a rundown of some of the earnings vol, the earnings straddles, the earnings performance from a vol perspective that we saw out here over the past week. And this was certainly the hot week, the big week from an earnings perspective. Well, let's dive in with some of the sexier names I know a lot of you guys like to watch. Of course, let's start in the area of all things hyped. Tesla. They had earnings earlier this week, I believe it was on Wednesday. They were pricing in, the stock went out right around 202, I believe. Yeah, right around 202 and a quarter. They were pricing in a little over $12 straddle, so right around 6%. The stock initially looked like it was going to deliver on that. It was opened up pretty aggressively, up around 211. Got as high as, I believe, 213, but immediately almost started to fade that and gave up the lion's share of that move, only closing up about a couple of bucks, I believe. So that $12 straddle, that 6% straddle, if you were patient, it kind of was one of those things where it worked out kind of nicely for both. If you were aggressive and adroit with your hedging and your unwinding of your positions, you were long premium, you could have worked out favorably in your end. And then also, if you were patient at the end of the day as a premium seller, it probably worked out fairly decent as well. Probably popped a few tums there in the middle, but overall, it wasn't. You're not the worst for Weir at the end of that one. We've certainly seen much worse events for premium sellers over the years here around earnings. Apple also earlier this week, they closed right around 118 and a quarter or so. They were pricing in about 5 and a quarter, so about a little over 4, about 4.5%. They were pricing in for their straddle. The stock took it on the chin the next day. It was off about $5. So that straddle is actually fairly actively priced, and right now is trading about $3.75 lower right now, right around 114.5. So that straddle did all right. Again, you had an opportunity to take it off for fairly decent levels if you were indeed so inclined, and also to scalp it a little bit. Twitter, also the much maligned of late Twitter, who can't seem to find a dance partner. And they got bid up all the way to nearly 25. Actually, they crossed 25. They hit 25 and a quarter a few weeks back on all this takeover buyout speculation. When the last dance partners kind of walked away at those lofty levels, their stock has kind of crumbled since then, back down to where it was pre-speculation, right around the 18 level, and going into earnings, it closed right around 17.5 or so. They were pricing in a little over $2, so about 12%. And the stock the next day was pretty much almost unched. So, yes, premium sellers certainly winning the day out there in good old Twitter. And also moving on to the artist formerly known as Google, now known as Alphabet. Of course, they were closing right around that day, right around, I think it was 817.35 was where they closed on earnings. And they were pricing in nearly $40, right around 5% on that straddle. And lo and behold, the next day they opened up a whopping about $12 or so. They rallied a bit since then. They rallied another 10 handles from there. So if you waited a bit, you could have done better. But still, overall, underperforming from a volatility and from a straddle perspective. And last but not least, good old lord of all things online retail and web storage and just about everything else these days online, Amazon. They went into their earnings closing right around 8.18, so similar levels to some of our other names out here like Alphabet, and they were pricing at about $50, so a little bit juicier straddle out there of late. And we've seen in recent cycles that the juice out there in Amazon has been warranted. They tend to move, and lo and behold, $50 straddle out here, about 6% is what they were pricing in, and lo and behold, this name pretty much delivered, dropping from about 8.18 down to right about 7.80 today right now. Net off about nearly 40 handles, but overall it's been about close to 50. So yeah, it's been an aggressive downside day for Amazon. I guess they can't sustain that love forever. But before we dive into all things VIX, I don't know, Bill, I know you don't watch a lot of individual names, but in the aggregate, a lot of these names tend to move the S&P, which of course brings them into your radar from a vol perspective. Any thoughts on the week that was from an earnings perspective and a volatility perspective?
Yeah, this is peak earnings week, and we have some of the top names reporting this week. So Apple, Amazon, obviously I have to follow all that sort of stuff closely. Been pleasantly surprised how well earnings have turned out relative to expectations so far. And there have been some exceptions, but the financials just killing it. Technology, with a couple of exceptions that you noted, doing quite well. And we're seeing not just the earnings beats that we've seen in recent quarters, but we're also seeing a surprising amount of revenue beats as well, which bodes quite well in the fact that it looks like this is officially going to be the end of the earnings recession after, I think, 5 quarters. Because if things play out as they have so far, we'll at least be getting a year-over-year earnings increase from some corporations, and that's even with a relatively strong dollar and oil prices that really haven't done much as of late. So I think that all bodes well from a corporate perspective, and that's something we have been able to say for a year and a half now.
Yeah, it has been an interesting run out there, and who knows? Maybe this cycle will be finally the point where the worm has turned. Andrew, I know these types of weeks are really what you guys live for over there in the land of the pit. You get to chat with people all day long over there in the pit chat about all things earnings and straddle and option related. So this is certainly this is peak season for you guys. So a lot of names, a lot of big names that I'm sure your chatties and your mentees like to follow. What was lighting it up over there in the pit chat this week? What was catching your chatties' attention?
Mostly the kind of the after earnings plays. One thing about this cycle is a lot of the names were kind of the moves after earnings were generally less than the straddles. So we've seen a lot of kind of big disappointments and stuff in prior ones. And right now, a lot of those were, under basically a lot of the moves were pretty underwhelming relative to, how the market prices the straddle. So another thing that I thought, with in earnings season getting into full gear, usually VIX drops, and it's not dropping today. So it seems like normally as you get into the cycle, I usually expect VIX to drop. So I guess, of course, the election is making things different, and that's the trend. So I think, and it's weird too, is good earnings. We had decent GDP numbers and things like that. So all that supposedly should kind of push volatility. You'd think push volatility down a little bit. It's not happening today. There goes VIX, trade 16. So I was pretty close on that one. And as far as, maybe this kind of sets up the rate picture now. And maybe this sets up, better news. Could be, they do something with rates, and all of a sudden we have some volatility back in the market again. So it'll be interesting to see how this sort of plays out. But it looks like, what I would like to see finally is that the good news of earnings actually is a good thing because companies are making more money. It's not because the Fed is not going to, raise or lower prematurely as they have done in the past. Everything is good, so now the Fed's not going to raise and everybody gets bummed and sells off. So it used to be the good news is bad news thing. So I'd like to see if the actual good news becomes good news now. So and we will see.
We shall see indeed, sir. Let's see into the realm of all things VIX options. Touched on the futures earlier, like we said, futures flattening out a little bit. Out there in options land hasn't been, as we alluded to earlier, the most robust of volume weeks. In fact, it's already been kind of a light season, and ADV, which has been hovering around 600,000 for the better part of the past year or so, at least the past 6 to 8 months, is now well under that, about 525,000 or so. So the ADV has come off quite a bit. Even with that substantially reduced ADV, this week was still fairly anemic, with most of the days this week not even coming close to touching that 400,000, 334,000. Today, so far, we are a little bit past halfway in the show, halfway in the trading day as well, and only about 240,000 contracts lighting it up. So it doesn't seem like we're even going to hit the ADV again today. So all this much ballyhooed talk about how will the election translate to VIX options and futures and volume and VIX cash and et cetera, so far at least isn't perhaps giving that jolt of volatility, that jolt of electricity that a lot of people were hoping for. Trying to parse, reading the tea leaves a little bit this week, trying to parse some of the more interesting trades that we could suss out of the activity. We saw a couple of interesting trades going up this week that were somewhat sizable. Again, you got to kind of really fight for them on a week like this. But on Thursday, we saw yet another of the much ballyhooed 1x2s that we've been talking about out here a lot, going up yet again. This time a little bit different in structure than we've seen of late. They tend to usually, when we see them, usually to be fairly narrow, usually in the 3 to 4 handle wide range, maybe 5 on the wider side. This time, someone going 11 handles to the tune of the Dees 1930 1x2, selling the 19s 20,000 times, buying almost 37,000 of the Dees 30s, doing that for $1.42 and 40 respectively. So interesting that they would do it on such a wide run. It is indeed open interest sizable on both strikes, so it could indeed be closing. I don't think it is. I think this is indeed opening, which kind of leads you to wonder why you would choose that second leg so far away. If the point of that spread is to really have it kick into high gear when the VIX starts moving, you need a hell of a pop for VIX to really this trade to really start paying off. Again, it could also be they're trying to make the premium a little bit more favorable in there. They couldn't get themselves to buy 2 of any lower strike. I can certainly feel their pain in that regard, but still, that's a hard one to see being a home run, unless indeed, that's even post-Trumpocalypse, so you need something else. You need a Fed-ocalypse, something else to come in to really juice that trade into high gear. We also saw about Thursday, actually, paper gobbling up some upside in Dees to the tune of the Dees 27s, about 100,000 of those going up. Looks like paper, I think I've been buying the lion's share of these for prices around 50 cents. Again, like most VIX executions, going up precisely midpoint in the market there. So we'll have to suss those out a little bit and keep an eye on those to see how those were performing. Also, it looks like a 1x2 going up on Wednesday. This was the Nove 1721. So again, tighter, more of the usual type of 1x2s we see out there, going up 25,000 by 50,000. This time looks like, I think, this one might have been closing given the open interest there and the strikes and what we've seen out there in VIX land, and also the fact that they were buying the 1x2, which is the other way around than we usually like to see it. They were buying the 17s, selling 2 of the 21s, doing that for about $1.50. They could be putting that on for even money, but I would probably wager that as closing, again, given size open interest on both of those strikes, including a ton on the Nove 21s. And then, of course, massive upside was the order of the day earlier in the week on Tuesday, with about 75,000 of the Nove 21s coming in, getting gobbled up for about 46 cents there as well. And if you saying, well, I'm kind of done with the 1x2s, what else you got in the vertical range? How about a vertical time spread this time? So we got the Nove 22, Dees 30, about 1x2, close to it. We saw about 20,500 of the Nove 22s, paper buying those for 39 cents, and then turning around to sell about 25,000. So not really 1x2, actually more 1 to, close to a bit of a ratio, but not 1 to not 1x2 of the 30 calls for 31 cents, doing that 25,000 times. Don't see a lot of those funky time verticals going up out there. So that's kind of interesting in and of itself. Before we move on, some of the hot strikes and things, I don't know, Bill, you watch obviously a lot of VIX options activity. Anything catching your eye out here this week? And also, I don't think we've had a chance on the show for you to kind of weigh in on what is effectively the trade du jour out there in VIX options land, that short one, long two ratio kind of vertical. Is that a trade you're a fan of? Do you employ that out there in the Luby asset management? And what are your thoughts on that trade as well?
I'm one of those rare souls who doesn't do a lot of the 1x2s.
You're that one guy. You're the one guy.
I'm more of a vertical spread guy, but I do occasionally get into the ratios. But it's funny, looking at the decent 1930s, I was wondering with if you guys have talked in addition to our election about the Italy referendum, and I think that goes off December 5th or 6th or something like that. But that's an issue that we don't hear about at all in the United States. And if the Italians vote to and we don't need to get in the weeds here, but basically to change the Constitution, and we have the resignation of the Prime Minister and Eurosceptics getting into power, we could see a potential unraveling of the entire Eurozone and following this election little by little. And I would think by the middle of December, you would see some of the cracks in that starting to happen. So that makes for some interesting December non-U.S. election-related trades.
Yeah, this is the portion of the show where we miss our old buddy Jared Woodard, formerly of BGC, I believe at Merrill Lynch now, who used to always dive deep into the international drivers of volatility. And you're right, that could indeed be a big driver because someone is certainly banking on some size upside out there in that D's time frame. So Italy would certainly fall on the radar. It's kind of hard to really see something domestically that would really drive that. I mean, we have the Fed kind of on the radar, but I don't see the Fed really making that come to pass unless something really goes crazy out there. Earnings season having wound down, election already kind of wound down at that point. So not really a lot else on the radar in that mid-December time frame. That could be a big driver vol-wise. And Mr. Rock Lobster, anything catching your eye this week? Obviously, we don't have Russell, so he can't do his Russell's weekly rundown, so everyone's sad they don't get to hear his music this week. But that said, anything catching your eye out here from this relatively light VIX options week?
Yeah, I don't think there was just a lot of volume here this week because of exactly what I was talking about with VIX. It was an off-cycle week, and all the big actions happening, around the November cycle, and we're probably seeing a little more action now that VIX is catching a bit into the weekend. This is it feels like one of those classic. Okay, what news is going to come out over the weekend about Hillary or whatever? So they're going to bid everything up into the close, and we see if there's follow through tomorrow. So. There is some action now starting to jump on VIX options for next week. So, and as I look at it, and we'll see what happens. But they're buying some November 20 calls. So it looks like there's a little bit of buying activity. And VVIX just leapt. Is it over 100 now? It is well over 100 in November now. So. That reminds me, I have some call spreads I have to sell. So I just think, this is part of kind of, trading around an event. So usually light prior to, and then all of a sudden now we'll see maybe a little bit more action. So we'll see.
While you go work your VIX spreads, we'll dive into here the VIX hot strikes for the week. Kind of a euphemistic term this week. Not really anything super hot this week, and it's pretty much mostly Nov calls with one put and one DECE call out there as well. Starting off, number one on our hot strikes list, the Nov 21s with 327,000. Again, volume still fairly light, open interest fairly light, so a lot of these names probably wouldn't be on our top 10 or would be very much farther down in a regular active trading month. Number 2 falls off a cliff to number 2, the Nove 18s with 173,000 open there. Then number 3, the Nove 24s with 161. $1.60 open for the Nove 28s. Followed number 5 by the Nove 20s, the aforementioned Nove 20s. So again, about exactly the same number, about 160,000 open there as well. Followed by the Nove 23s. Is kind of just the whole Nove call strip, 155,000. Drops off again to the number 7 spot, the Nove 17s, 136,000. All the way down to number 8 to find our first put and only put on the list, the Nove 17 puts with about 135,000 open, and a similar number, 135K of the Nove 26 calls, all the way down to number 10, where we get our only non-Nove contract on the list, the Dees 30s. Again, we can't go a week without having someone out there loving the Dees 30 strike. That, of course, coming as a result of that 1x2 we talked earlier, the Dees 30s getting some love to the tune of 134,000 open on that strike. Total of about 5.1 million open, again, light open interest, about 3.9 on the calls and about 1.2 or so on the puts. Before we move on, this is, I wish Russell was here to debate this topic with us, give us the SIBO perspective. Maybe, Bill, you have to play that role today instead, even though I know you're not a SIBO representative. But they did launch another new product. We're always talking about different products out there in the vol space. SIBO, of course, has the skew index already. We talked about that many times on the show in the past. They quote it in terms of obviously the put over the call, which is investment skew, and they quote it in somewhere in that 125 plus range. So that notation I think gets a little bit confusing to people. If you thought that was confusing, well, they got a new one for you. It is they're calling it the Smile Index, the S&P 500 Smile Index. They're referring to it as a premium capture strategy benchmark. So again, this is the benchmark. I don't think there's a tradable product coming on this yet. Based on the steepness of the curve of implied vols of the S&P 500 index options. Again, also often referred to as the Smile, according to the press release. And this kind of strategy is kind of hard to break down in short release form. So I'll certainly give them some pointers for that. It's a challenge to get the press to understand what the heck you're talking about. But they break it down kind of like this. They say the strategy, it's an active strategy, alternates between selling a strangle on the SPX when the options Smile is steep. So again, selling both put and out of the money put and an out of the money call. And then flipping the script, turning that into a risk reversal. So selling the put and buying the call, a bullish risk reversal, when they term the Smile being historically flat. We say here historically a flat Smile associated with market bottoms, and suggest a higher probability of a market upturn. And the interesting thing about this, the thing that kind of made got my attention, was the way they're going to determine when to make that switch. You might think, looking at this, it's a Smile index, they're going to do some sort of differential between the put volatility, let's say the 25 delta put and the 25 delta call, and when the volatility premium in the put gets to X% above the call, whatever that level may be that they determine, that's when they flip to a risk reversal from a strangle. They're doing it a little bit differently than that. They're saying they're going to take, they're looking at the put to call ratio, and they're saying if it's smaller than or equal to 1.5, they say that suggests a flatter Smile, and therefore they're going to do the bullish risk reversal, sell the put, buy the call. If that ratio is greater than 1.5, it suggests a steepening curve, in which case they're going to do the strangle instead, and then they're going to overlay the rest with T-bills, as they always do, for collateral on the position. This is an interesting approach. I mean, they're kind of backing into the same thing by doing that, but I'm curious your guys' thought on the product itself, and also the notion, maybe the 10,000 foot perspective, as well as the approach they're taking of using the put to call ratio as the trigger for when to switch from a strangle to a bullish risk reversal, which is kind of an interesting approach. Maybe, Bill, you're our guest, so you get the dubious pride of place on this one. What are your thoughts here on this new index and the methodology they're using?
Well, I'll try and put on my best Russell hat. But to be honest, I just glanced at this, and I've heard more about it from you in the last minute or so than I have. I haven't run any numbers on it or anything. But conceptually, what as I read it, it says when the vol is high, when the curve is steep, you want to sell a strangle and capture the high vol. Makes sense. And when vol is low, you want to get long by selling a risk reversal, getting long. So that makes sense as well. So conceptually, I like the way it lines up. I haven't run any numbers. The put to call ratio is I have some issues with the skew index. I like it conceptually, but I don't like the way it backtests, and I don't like the way it performs under certain conditions. So I'm going to have to take a pass on everything other than the 30,000 conceptual, makes sense, need to run some numbers.
Bill, I'm not sure if you know how this works on this show, but that's what we do. We take nuggets and we break them down quickly on the fly here on the show. There's no back testing allowed. There's no actual. We got to do it just quick on the fly. That's what the show is all about, sir. So we'll give you a pass on that one. You are the guest, but in the future, seat of the pants. That's how we roll here. Rock Lobster gets that, right, sir? So what are your thoughts here? Your back of the napkin calculations on all things Smile Index here from our friends over there at CBOE.
I have to admit on this one, I'm actually I'm just going to admit that I'm a little confused by this index. I'm trying to. It's the first time actually I've heard about it. It takes me so long to do anything with new products. I'm doing even worse than Bill is doing on this because all this does is make me it makes me do a head scratcher on this.
Well, there you go.
I have to be honest.
This is why I need Russell on the show here to dive deep into these SIBO product launches. 0 for 2 here on the guest panel. But yeah, I'm kind of with you, Bill, in that conceptually I can kind of get behind at least the thought process behind it. Whether the methodology, how that's going to work, again, like I said, I haven't had a chance to sink my teeth into it. It could be an interesting way. I mean, that's a challenge to try to quote that, and I know certainly to explain that in something like a short press release to the media, something as obtuse as this already is the challenge. Then if you were instead to go the way I advocated, which is to take the differential, the implied volatilities of the call versus the put, there's no way you could break that down into anything that is digestible by the lion's share of the investing or asset management public. So maybe that's the reason why they went this way. People understand things like put calls. There is a marketing aspect that has to go into all these products as well. But this is an interesting thing. Again, I call it product. It's an index right now for thought and research purposes. So we'll keep an eye on it. We'll track it and see how this rolls. Meanwhile, we're going to keep on rolling right on into the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Volatility Voicemail. This is indeed the portion of the show where you guys get to take the reins with your questions, your comments, some quick, some silly, some all sorts of epic. We'll see how many we can get to here. Before we do that, final check-in here on our poll for the week. We asked you guys starting at the beginning of the week we talked earlier in the show about the impact the election is going to have on the VIX, and we asked you point blank, is the VIX already pricing in a Hillary Clinton win? Is the Trumpocalypse done? Is that over? So where do you think VIX is going to close on Election Day? If you haven't voted yet, you still got about 7 hours or so. It expires later today. But that said, so far, I won't give the numbers yet. We'll have our guest weigh in here and what he thinks. VIX and more, a.k.a. Bill. Where do you think VIX Cash is going to close on Election Day, A? So what's your answer to the poll? And then, B, what do you think our listeners are voting for?
I'm pretty close to 15 here. I'm the low 15s. You even without I would have said that even without the whatever's going on news-wise. Well, since we started this show. But, typically any event, whether it's a major earnings announcement, whether it's a Fed meeting, whether it's election, you see a ramp up in volatility. It's a pretty common pattern in a week or so going into it. And then you see, regardless of the outcome, you usually see some sort of crush. So I'm in the 15 to 16 camp. But our readers, I'm guessing, our listeners, or however they're accessing us, I'm guessing are probably more in the spike camp. Just a wild guess.
Yeah, I probably should have given you the choices there before I asked you. But you weighed in right about the right level. We gave them the choices of pretty much unchanged, so between 12 and 14, kind of where it's been vacillating for the last week or so. Elevated, which would be in the 15 to 18 range. That sounds like where you are, Bill. The spike camp, so over 18, and then sell-off camp below 12. Before I give you how it's shaping up right now, Mr. Rock Lobster, if you have any final thoughts on this, or if you've changed positions on this, are you still in the elevated 15 to 18 camp?
I'm still in the elevated 15 to 18 camp. But the funny thing is
well, it's so funny that it knocked him off his computer. Mr. Rock Lobster, are you there? I believe we have lost the Rock Lobster. He's always talking about how great the connection is out there in Maine, and so we'll see if we can get him back, listeners. Meanwhile, I will give you the results as they are so far. With still about 7 hours left to go in the week. We are at about a quarter of you saying unchanged, so between the 12 to 14 range where it is right now. Elevated, about 22%, so very close on the heels, saying elevated to 15 to 18 range, also where Bill is, where I was saying I was earlier this week, where a lot of our people have been saying they were. A third of you, so still the leader, saying spiking over 18. And then last but not least, about 20% of you saying a sell-off, so below 12. Again, about 7 hours left in that poll. If you haven't weighed in at options, you can find it there. All right, let's see how many we can get to. I'll start off. Here's a comment from Al Melvin. We were asking him where he was responding to our poll on where do you think VIX will close, and he said, "We will find out by our calculations. VIX is the best mathematical equation in history." So there you go. A vote for VIX being the awesomest thing since sliced bread. At least Al out there thinking he's drinking the VIX Kool-Aid. He likes it. Tasty Kool-Aid, he says out there. All right, moving on to, let's see here. Here's an interesting one from Mr. Rock Lobster. Lost power out there in all things Maine. We'll see if we can get him back. Oh, actually, let's see. We might be able to swap him for another member here of the Pit Squad. Let's get that sorted out as we move on here. Do we have the greasiest of meatballs joining us now?
We've got Greasy Meatball.
So how funny is that? Andrew's always talking about how great the security of his system is out in Maine, and we lost him.
Of course you did.
I'm back.
Oh, he is back. Wow, look at that. What a challenge it is today to get everyone rolling. But that said, since we have you on, Mark, really quickly, we haven't had a chance to check in with you. What are your thoughts on the week that was from a vol perspective here?
I mean, it was a weird week in that, the S&P didn't do much and VIX just kind of climbed.
Actually, I'd rather have Mark go back into option pit and trying to fire up our chat room.
I'll do that too. It was really odd. And then, it looked like it was an earnings thing, with about 8% of the value of the S&P reporting last night and today. It looked like vol had kind of the pressure had been released and, Hillary was going to win and yada, yada, yada. Now, I don't know if you saw this. The news is out that the FBI is reopening its investigation of Hillary Rodham Clinton. And so we have seen the S&P move from up 10 to down 10 and the VIX move to 17. So just a crazy vol move out of the market today, and who knows where it could go. I mean, this is just the market had basically priced in HRC winning, and that may not be the case anymore. So I think people are a little scary. But other than that, it looked like it was just a bread and butter vol climbing a little bit, and now vol off. But boy, they are smacking this stuff.
Yeah, so much for my crystal ball. It was looking good at the start of the show, but then Hillary and company had to go and give us a nice boost for vol. Speaking of vol boosts, we got a little bit delayed here with your questions. I'm sorry, listeners. So we'll do one more quick one here. This is like the most epic vol boost of all. Andrew Simon, bit of a thought question. He wants to know, what would it take to get a VIX of 200? Is that even possible, or does that mean the Earth would explode? I love the questions you guys send in. You get us all sorts of places. We talked, I think, before we had the other side of this question. Someone asked us kind of what is the lowest VIX could go. I think we kind of settled around the 5 level or so, somewhere in that range. But 200, that's an interesting question. Well, clearly it would have to be an aggressive downside move. We all know, given how VIX performs, it explodes when underlying moves to the downside. So also getting to that rich underlying premium area. And it probably have to be successive, multiple downside days in a row with kind of no stopping in sight, and the market just completely panicked. Because you have circuit breakers would kick in that would by nature kind of keep us from spiking that in one day. But I don't know, maybe successive multiple circuit breaker downside days, that I could see that happening. Take many days of that and no hope of it stopping in the future. But it would be impressive. I don't know, Bill, you must think about getting a lot of these kind of thought questions out there. What do you think it would take to get us a VIX of 200?
Well, we didn't get that far off in 1987. It topped out about 172 or thereabouts. But if you think about nowadays, what would happen if now that we have SPX options expiring every other day, if we went for, like we did back in 2001, if we had an exchange closing for a week or so and we missed a couple of expirations and had some craziness with settlements and, counterparty risk skyrocketed, it's not inconceivable, and especially some of these ETF products that can go broke because they're rebalancing. I could see a lot of craziness. I certainly wouldn't rule it out.
That's true. Another meltdown of a VIX product could also, in the heat of all that sell-off, could definitely exacerbate a scenario like that. Mark or Andrew, your thoughts here? How do we hit VIX 200?
Yeah, I think you're talking about a limit, multiple limit down days. You're talking about, continuous sell-off, or, some sort of absolute type of weird, panicky type of event where, something insane throws in the balance. Something like that, like a missing. I could see the other piece would be like a missing nuclear warhead. Like a James Bond type of stuff. A James Bond type of thing, where some Scorpion guy the Scorpion has taken control of a nuclear weapon, and the world finds out about it. Maybe VIX could go to 200 then.
So you're going right? With the literal Earth exploding risk that he pointed out.
Not
in
Earth
his question.
Exploding. I'm talking about a
city. I
mean, if we go to nuclear war, who cares? We're all dead. It's the single, nuclear warhead that's missing, that the Scorpion has, and he's holding the world for ransom for $1 million.
This is
so Dr. Evil steals a nuclear weapon, and he's holding the world ransom for $1 million. That would be something that maybe could get VIX to 200, Bill, don't you think?
Yeah, I'm actually concerned about what happens, the day after.
Well, then the FBI catches him, or James Bond gets him, and then, and interestingly, yeah, that's right, the bomb could go off, and maybe market sells off, but VIX comes in.
Yeah, we live in a terrorist age, and it's, I hate to say it, but so many things are possible now, or we can contemplate now, that we couldn't contemplate 15 years ago.
I think the rise of the Scorpion is my favorite. Anything to add, Mr. Rocklauster, before we hop on into the crystal ball?
I'm still trying to get over the rise.
Mr. Rocklauster is.
Where do you go over that? I think one thing that you could see though is the market can be down, but they can just keep bidding the vol up, which is always possible. So, I would just say, yes, it could take. I mean, but Bill said, it took in the old days. It took the 20% down day to drive VIX to 170 something. I thought the old high was 125, but kind of sounds low for down 20%. So, but that could happen. So, The only thing I could say is, it could be possible. I just, I hope I'm in dead and long dead in my grave before I see it, because it'll be an ugly day.
It will definitely be an ugly day. I think our multiple sell-off days is probably how it would happen. But I could throw a point or two to the Scorpion. I like that model unfolding. All right, it's time. Let's keep on rolling into our final segment, the Crystal Ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
Well, in a bit of a weird role reversal, I was actually the chief buyer of volatility last week, which is strange. I've been fading pretty aggressively, and it's been working. I've been winning pretty much every week. But last week, I was actually the buyer. I was 13.75, and I was, at the start of the show, I was the clear winner yet again. It was about 14.5 or so in the VIX Cash. Mark, you were right around 12.5. You were fading pretty aggressively, and Russell was splitting the difference, going 13 and a third. So all of us fading it, but I was going to be the winner, and then Hillary had to go botch things up. So I guess by default, I guess I am the winner, but nowhere near as triumphant of a victory as I was hoping for this at the start of the show. That said, since I'm the winner, I get to pick who gets to go first. So I'll let Bill go first because he is our guest, and guests should get pride of place. Bill, the object of this game, obviously, is to try to use all the tools at your disposal to attempt to prognosticate where VIX Cash will be at this exact moment next week, right at the end of the Volatility Views show. So it has to be at the end, because at the beginning, I was a clear winner. Then now all bets are off. So where is it going to be this time next week, sir?
So quick introduction. 1 week, I see more stuff on the economic calendar than I can remember seeing in a long time, in addition to, including the Fed and the employment report on Friday. So a week from now, excuse me, some of that will be off the table. I'm thinking we're going to be in the 1543 range.
I always can tip my hat to precision, and that's a very precise pick.
It's always best if it's a prime number, right?
I like it, yeah.
I should tell our listeners, by the way, we are right around the 17 handle right now, as Mark was alluding to, a big spike during the show here. So all the way from about 14.5 to about 17. So it's been pretty aggressive, settling off a little bit on that now, right about 16.75 or so. So that said, Mr. Greasy Meatball, you're our second guest here. So what are you feeling for next week?
I mean, right now, as I'm looking at live, it's 17.15. I've got to fade this, but I think this throws the whole election in doubt. I mean, I think this is a crazy game changer, and so I'm going to say 17.15.
Wow, unched. That might also go on record as your highest pick of the year, I think.
It might.
That's your
but
most.
This is, I'll tell you, man. This is certainly disconcerting.
It is interesting. I haven't had a chance to review it myself, so I'm kind of picking blind. Mr. Rock Lobster, give me another minute to digest all this info. Mr. Rock Lobster, what are you feeling for next week? Are you fading? Are you buying? Or what are you feeling?
I think we see higher. I think this will probably, I mean, just looking at this right now, I'm going to still say like 16.75, because I just don't believe anything's going to, well, actually I shouldn't say that. Nope, I'll change. I'm going to change. I'll say 17.50. We'll go higher. 17.50.
Wow, the pit crew.
You got to give me more than 35 cents, Andrew.
The pit crew coming up, coming high on the vol
We'll
skew.
collectively do 17.5. How about that?
Okay.
We shouldn't get two guesses. We'll both take 17.5.
He gave you a nice third of a point to the upside there. Very generous of him. This is why I like to go first, because our guest here scooped me on the downside. You guys are feeling this. Again, I haven't had a chance to read all the stuff you have. Maybe there's more histrionic stuff out there than I've seen. I've been busy hosting a show, so I haven't seen all the Hillary stuff yet. So that said, I'm going to go. I was feeling 15.5. Bill kind of scooped me there, so I'm going to go a little bit north of him. I hate to do that. I won't give him only a quarter of a point. I'll give you a full half a point, Bill. Nice generosity to my guest. I will say I will go 16 even. So there we go. About 15.43 on the downside with Bill, 16 even for me, and then the nice 17.15 to 17.5 range for the pit crew. I like that, the pit crew. We should go with that more often. Unfortunately, that's all the time we have for the Around the Block segment. It's also all the time we have for this episode of Volatility Views. But before we go, one last time, we check back in with my cohorts here, my partners in crime, see what's cooking in their necks of the woods that may interest you. Let's start with the aforementioned pit crew. Once you get your power back, what's cooking in the land of the pit?
We got our VIX Primer coming up on November 5th. You can go to optionpit.com/VIX Primer to check it out. It's going to be a great course and worth the visit.
There you go. Check it out, optionpit.com. And Bill, what's cooking in the land of all things VIX and more, as well as all things in your Luby asset management empire?
Two things coming up next week. On the 3rd, I'll be doing a webinar with ETF trends on VIX ETPs. And then look for a Barron's column on Saturday, the following Saturday, the whatever it is, 5th or 6th. And Luby Asset Management continues to roll along. It's been a great year so far. Who knows how much today has changed that scorecard. But quick comment, I know you're running out of time, but when you think about this election, think about today's risk may actually not be as risky as it sounds if we still have a predominantly Democratic Congress. So this may actually decrease the risk of a clean sweep from the Democrats and thus make the entire political risk spectrum less risky. Just something to think about.
Yeah.
There we go. We'll have to leave it there. Well said, sir. And on behalf of Bill and the Rock Lobster and Mark, the whole pit crew, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for joining us live out there on Mixler. We love you guys too. And we'll see you next time right here on Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.